Back. We are with Danielle Roberts, co-founder of Boomer Benefits, a top agency in the space of Medicare. They serve tens of thousands of clients across 48 states and is one of the most widely recognized brands in the Medicare insurance industry. She's also the best-selling author of 10 Medicare mistakes you can't afford to make. Hi, Danielle. And for our listeners who've not heard you before, you're a popular guest. Describe your background and what brought you to study Medicare.
Thanks, Josh. Happy to do that. So I am in the business now since 2005, going on 18 years. And originally, we used to help people with group insurance, and they would always turn to us for help with their parents because no one could figure out Medicare. And when that happened, we looked into Medicare and found that sure enough, it's absolutely confusing, too many moving parts. People don't understand the coverage, and it's intimidating, and people tend to postpone important decisions, and then they end up with penalties. So my agency helps baby boomers navigate Medicare across 49 states, and we help them with not only learning what the federal government first provides them, but then we assist them on the back end with selecting suitable coverage so that they're not stuck with unexpected Medicare expenses that can put them into danger of medical bankruptcy. And once they're our client and working through us with their Medicare policies, they are never alone in dealing with Medicare. They can reach out to us anytime with any type of issues that might happen, and they'll have our support.
So, what are some challenges that you're seeing for retirees in Medicare as inflation continues to affect us all?
Yeah. One of the things about Medicare that a lot of people are unaware of, in fact, it's number one chapter in my book, is we meet hundreds of people every year who are approaching retirement and didn't even know that they had to pay anything for Medicare. They assume that they've been paying these FICA taxes all their lifetime and that Medicare is going to be paid up. And then they get there and they find out that they're going to pay at least $164.90 a month in 2023, and considerably more than that if they are in a higher income bracket. So it's really important for people to plan for this early, to meet with their financial planners in their early 60s, because your income starting at age 63 will affect your Medicare premiums at age 65. And Medicare health insurance goes up. It has inflation. You can look at the history of Medicare premiums. They have gone up over time and they will continue to do so. So it is a little tough for people out there right now trying to make ends meet medically. And so we'd like to show them their plan options. There are options available in any budget range for people with Medicare to get good coverage, but it's important they understand what they're buying. And I think that's the biggest challenge for them, Josh, is they're coming in, they have this money that's going to be pulled out of their Social Security check, and then there's hundreds or thousands of plan options that they're subjected to, and they get lost. They're afraid to make a decision.
And so you talked about IRMA, I guess was kind of the income related Medicare adjustment. As I say, your dreaded Aunt Irma, and your income at 63, she's the aunt you don't want to visit your house for the long weekend. Talk about IRMA a little bit. People don't realize how that's like a veiled tax on the successful.
It absolutely is. So, as we know here in America, when you earn more, you get to pay more taxes. Doesn't mean that we like it, but it does affect Medicare as well. So, in 2023, if you earn more than $97,000 as an individual filer or $194,000 as a joint filer, you will pay more for Medicare Part B than everyone else. And there are several tiers of incomes that they will look at. And some people can pay over $500 a month for Part B. And if you're a couple in the highest income bracket, that's each of you paying your own Medicare premiums of $500 something a month. And so it is not an expense that you want to be caught unawares about. You want to know going in the things that you might be able to do before you approach age 60. Is maybe not a good idea to sell a piece of property and take a big capital gain, and that might affect your income for a year. It can drive up the rates for Medicare Part B. And this particular income-related monthly adjustment amount affects not just your Part B premiums for Medicare, but also your drug plan. So if you enroll in Part D so that you have coverage for outpatient medications, they will have you pay the plan premium to the insurance company, and then Uncle Sam will also tack on ugly Aunt Irma and drive up the cost of your drug plan as well. So if people don't plan for that, they could severely underestimate how much money they need for healthcare and retirement.
So if that's you, if you're the person who's screwed by Aunt Irma, what is the typical, is it $1,000 a month for a married couple filing jointly extra?
It's at the high end, it's 1,000. But for instance, even in the first bracket, that premium goes from $164.90, I think, up to around $230 a month. And while that doesn't sound like a lot to everyone, those are people that are retiring. They may be living on a fixed income from here on out, and every dollar counts.
Oh, without a doubt. And so if you're 63, this is a question I have. If you're 63, you're still working, and you make a lot of income so that you trigger IRMA at 65, but you retire at 65, can they recalculate that, or are you screwed? Because your income at 63 was higher.
They sure can. So there is a form. We help our clients with this at Boomer Benefits. When they're coming into Medicare, we talk about all of this. And if their income is going to be over that limit, but they have retired in the 2 years since, and now they earn less income than they were 2 years ago, there's a form. You can actually Google it. It's form SSA-44. And this is basically an appeal form where you can choose one of several categories. On the form, retirement is called work stoppage. And you can say, hey, yep, 2 years ago when I was 63, I did earn that amount, but now I have retired. You provide whatever documentation that you can of that, and Social Security will review it. In fact, I use this to lower my own mother's Part B premium. She got caught in one of those IRMAs, and we submitted it, and we were able to successfully get that removed within a couple of weeks. In the meantime, though, you want to keep paying the premium that they have assessed. So when you get ready to go on Medicare, you're going to get a letter from Social Security. It's called the Benefit Determination Letter. You need to review that and see what they're telling you they are judging your premiums will be for Part B. If you see the premiums are going to be increased, that's when you file the appeal letter. However, you want to go ahead and pay the higher premium in the meantime so that they don't cancel your Part B. And then once they approve that, they will actually credit those months back to you. So you don't have to wait the whole 2 years for that to catch up to you. And even if your income changed for other reasons, marriage, divorce, death of a spouse, sale of an income producing property, all of those are valid reasons on the form where you could appeal and try to get that lowered.
What if you miss the appeal? Like, is there a deadline or?
There is not a deadline, but it's just in your best interest to do it as soon as possible. I don't know how many months retroactively they would credit.
Maybe 6 months, like Social Security?
Yeah, I probably wouldn't go longer than 6 months. We try to have people do them right away. And something to know is that every year thereafter, you're going to get that same benefit determination letter in the late fall. You'll get it in December, January time, and they're going to say, okay, now we've looked at the next tax return and here's what you earned for next year. So if you appealed the first year, you may end up having to appeal the second year as well. So as soon as that benefit determination letter comes in, that is your chance to go ahead and get that appeal filed so it can be handled in a timely manner.
Great. We're with Danielle Roberts, best-selling author of the top 10. Oh, wait, I always screw up your title of your book. The 10 costly Medicare mistakes you can't afford to make. So, folks, if you have a question, we're live on YouTube, Clubhouse, WOR Radio every Saturday and Sunday at 9. Also Spotify, our iHeartRadio app, and more. So if you have a question on YouTube or Clubhouse, type it in the chat. We will go to your questions. If you want to speak to Danielle, just raise your hand on Clubhouse. We'd love to bring you up and talk more. And folks, if you like what you're hearing, if you want our book, call us at 888-988-JOSH. We will give your book, 10 Costly Medicare Mistakes, for free when you schedule and keep your no obligation review. So this IRMA thing really ticks me off because this is a veiled tax on those who've saved. And so when you add, think about this. If you make a lot of money, you're paying 37% to the federal government, 8.97 or 10% to your state, unless you're in, Florida or Texas or no state income tax state, then you're paying the 3.8% Obamacare tax, which they never got rid of.
Yeah.
Then you're paying these other taxes. It's like death by 1,000 cuts. Now you got to spend an extra $1,000 a month as a married couple. And what you said is dead right. There are varying thresholds of IRMA. So you could make, let's say, 200 grand a year in retirement. You could be a retired, worker for IBM or whatever it might be. And the fact that you have a pension and Social Security and some other things lift you above that threshold. I forget what it is, like 175 grand or something like that. And then boom, you're slapped with this extra premium. It looks like it's Medicare's cost, but a lot of people didn't even know they could appeal this. So that advice is pure gold. Form SSA-44, is that correct?
That's correct.
And folks, if you need help with that, call us 888-988-JOSH, and we'll give you Danielle's book and get you in touch with the Boomer Benefits people as well for a free consult. We've had many listeners over the years call them. So folks, call us now, 888-988-JOSH. We'll be back after these messages. And we're back. This is Josh Jelinski, the financial quarterback, with Danielle Roberts, best-selling author, 25,000 books sold. That's amazing.
Thanks.
And counting. We've had a couple of these Medicare people on. Are you guys, I think there's 3 or 4 of you who are the Medicare sort of experts in the country who write best-selling books in the space. Is there a little rivalry between the Medicare authors? I've had them all on the show. And it's funny. 3 I have back as recurring regulars. 1 I don't have anymore. But there's maybe 4 or 5. Do you all talk? Is there a Medicare forum or are you rivals?
Well, anyone can publish these days. So the fellow insurance agents who have published books, of course, and we all talk about whose book has sold the most, who has the most reviews. We'd like to check it on Amazon. It's so much fun when yours is the #1 seller. But there are also books out there that are written by other experts, and those books have done quite well as well. And I read their books when I was preparing the notes for mine to make sure that we wouldn't plagiarize anything, and that I had an understanding of making my book very different in what it came out with than theirs. And so I don't know if they have noticed my book, but I certainly have noticed theirs and wish them well, of course.
Yeah, it's funny. We had there was no book on Medicare for a number of years, and then all of a sudden it was like 4, boom, 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 boom. Paul Solman, I think, was one. Am I saying that right?
And Patricia Berry has one from AARP.
Yeah, and then there's there, but I like yours the best. It's simpler, you're relatable. I mean, I like them all, but you're one of my favorites. So. And then there's a new guy who's kind of the rising Medicare guy doing a lot of YouTube videos. But the whole point is Medicare is confusing. So we're going to break down A, B, C, D, the alphabet soup, as I call it. We talked about IRMA. Any other things on IRMA before we go to the alphabet soup of Medicare?
The only thing that I would add on the IRMA is that just to say, like, let's say you didn't even know you were able to appeal. They will automatically adjust that down once the window of time has caught up to you. So let's say you did pay more at 65 because you were earning more at 63. If you do nothing at all, when your tax return goes down from having retired, that will catch up to you and they will automatically adjust it at that point. But just want to share, there's just no reason not to apply. It's free to submit the form, and if you can get it done sooner, it's great.
So we could have just saved you, if you're listening, $800 a month if you're a married couple and you made a lot of money and then you lower it. And by the way, you want your financial planner to work in concert with your Medicare expert. Most financial planners don't have any cognizance of IRMA planning, but we do. So call us at 888-988-JOSH. But there's a whole navigation of, you got to start when you're 50 if you don't want to really get screwed on Medicare premiums because you have IRA distributions. So there are a lot of people I talk to. If you wait till you're 75 and pulling out money out of your IRA, you're screwed. So you got to start when you're 50. Why is that, Danielle?
Why should they start taking 50 out in terms of how it could
No,
affect Medicare?
meaning what most people do is they think Medicare is a subject for older people. Like
Ah, I
I'm
see.
41, I'm 50. Why should I care? And I think it's
Mhm.
very important what I was sort of getting at in where you locate your assets so you can create this income bridge so you don't push your income above the IRMA threshold when you're
Yeah.
63 to 65. Because that's something like they didn't teach us in financial planning school that I've sort of learned over the years by meeting with people such as yourself and kind of putting some of my strategies along with what I've learned about Medicare and IRMA. And really, there's a whole generation of people like you're 75, you're 80, you're taking your RMDs, you're screwed. You can't really avoid IRMA. But if you're 50, you can avoid IRMA if you do wise planning.
Yeah, and that's just really a great point too, right? Because we do webinars, Medicare one-on-one webinars for financial advisors all over the nation. And I always say that this is where our worlds collide. It's so important for the Medicare advisor and the financial planner to work together because you want to have all of the facts about what you might be facing for those Medicare premiums. And not only should you start the financial planning process early, making sure that you're able to put some of those things in assets that aren't going to drive those premiums up on your Medicare Part B. But also, I will tell you, we see so many people skate in like 64 and 305 days before they ever even crack open a book or start to learn Medicare. We've had people call that will tell us, yeah, I turned 65 last month. I've got to figure this stuff out. Well, it's really too late at that point for you to do much about the income stuff. But on the other hand, also, you're rushed to make a decision. And you're going to have 1,000 telemarketers calling you trying to get your business from insurance companies. You're going to have mailers a foot high coming in from all these different Advantage plan companies and Part D companies, and they're going to be stacked up, and you will feel overwhelmed. So we recommend that you start learning about it much earlier. I often say there should be a class at age 50 so that you can have an idea of what's coming in your federal government benefits, and then you have an opportunity to prepare to learn what those are and make those decisions as early as possible. But it's a minimum in terms of learning the parts of Medicare and the options you're going to have. You need a minimum of a year for that so that you feel really comfortable and knowledgeable and that you don't get hoodwinked by some salesperson that's just hawking one plan. You need to take some responsibility when it comes to choosing your Medicare plans, and the financial planning piece goes right along with that.
We have a comment in the chat. Medicare replacement plans are horrible, lower monthly payment, but you show up at the doctor's office and nothing is covered. What's your comment on that?
So Medicare replacement plans, he or she is referring to Medicare Advantage plan. And yes, they sometimes have some notoriety. So with an Advantage plan, you're going to have a very low premium up front. You've probably seen the aging sports celebrities telling you on TV about this amazing plan where everything is going to be free and we're going to send you the kitchen sink and $1,000 a month and a free pink Cadillac will pull up in your driveway when you sign up for our plan. Now, I'm kidding. I mean, I say this in jest, but truly, those commercials do such a disservice to the Medicare beneficiary because they will advertise benefits that maybe someone can only get in a couple of counties in the US if they have Medicare and Medicaid. And then people rush to enroll and they get told on the phone, well, you don't qualify for that plan, but I've got this other plan over here that's really amazing and we could sign you up in it. And they rush through the sale. They don't check to see if their doctors are in the network. They don't check to see if their drugs are on the formulary. And they failed to mention that some of those things on those plans may cost you 20%. Typically things that are the most expensive, like chemotherapy, radiation, dialysis, and durable medical equipment. And so there has been some backlash about this because seniors don't often know what they're buying and they don't realize this. So if you want to consider a Medicare Advantage plan, you have to know the lower premiums up front are an offset for the fact that you're going to work with that plan's network and you need to make sure your physicians are in that network. there's going to be a built-in drug plan on 90% of these plans, which sounds great on the surface, but you need to make sure that your medications are on that plan's formulary. So if you find a plan that has all 4 of your doctors in the network, but it doesn't cover one of your medications that's otherwise going to be $600 out of pocket, you're going to pay that out of pocket. And these are the things that people overlook. They don't work with a reputable broker to help them and make sure that they know what they're buying. And then they end up in plans and they're surprised when they get to the doctor's office and they owe a $50 copay or they've got to pay $200 for an MRI.
Wow. We're with Danielle Roberts talking about Medicare Advantage. What other things? Because, yeah, Medicare Advantage, everybody thinks it's cheap, but there are all these potential hidden costs. What other things should Medicare Advantage recipients look for? Like, let's say they're struggling. I mean, generally, I've always heard from people in the Medicare game, you know, Medicare Advantage, it's great if you're struggling and have no money. And, you know, like I live in New Jersey, so a lot of people like my parents, they were okay with it because they only went to, you know, whatever, the St. Barnabas network or, you know, Geisinger is really big in parts of some parts or Hackensack Meridian. Like if you're not willing to travel to New York or Philly, it may make sense. But if you want to go, you know, to the top cancer hospital, it may not work out very well for you.
Absolutely. So the main thing that you give up when you choose original Medicare and you add on a Medigap plan, you have access to over 1 million providers nationwide. You can go to the Mayo Clinic for treatment. You could go to MD Anderson down in Houston, arguably one of the best cancer hospitals in the world. And you're going to have the coverage. Medicare pays 80%. Most Medicare supplements pay the other 20%. That means if you need something like chemotherapy, you're paying nothing out of pocket if you have a plan like a Medigap Plan G. Those plans cost more though. You're paying a premium for freedom of access and the peace of mind that you get on the back end from knowing that when you're in the hospital, you don't have to be worried about what bills are coming in the mail. What you give up when you go with the Medicare Advantage plan is they're going to have a network that's based in your local area. Now, there are some networks out there that may have 2,000 providers, 5,000, maybe even 10,000 providers on the network, but that's a lot less than a million. So you hit it right on the head, Josh, because if suddenly you get diagnosed with something and the best place for you to go is the Henry Ford Center in Detroit or the Mayo Clinic, and you're not in network, especially if you have an HMO Medicare Advantage plan, which are the most popular, those don't have coverage outside of the network except in emergencies in many circumstances. A PPO will give you more flexibility, but you're going to pay a lot more than to treat at those out-of-network providers. And so you have to weigh the cost with the fact that you'd be working with a network, and is that network going to work for you? If you're a person that stays close to home, maybe it's not a problem at all. Or maybe you've been on an HMO before and you didn't mind having to wait for prior authorizations and getting referrals from your primary care doctor to see your specialist. But that's why the plans are cheaper. And so you want to know that going in.
Wonderful. We're with Danielle Roberts. She's written the book on Medicare. So folks, if you have a question on Medicare, type it in the chat box or raise your hand. We'll call you up. If you have a question, you could go live with Danielle Roberts, one of the top nation's experts on Medicare. We've had her on before. People have loved her. They said, bring back Danielle. Bring back Danielle. Now, we're going to also talk about any deadlines in Medicare. I think there's a new Medicare deadline that people need to be aware of that we're going to talk about after the break. So, folks, if you want our book, 10 Costly Medicare Mistakes You Can't Afford to Make, you can go to Amazon or wherever books are sold. Buy the book. It's cheap. It's $10. It's well worth it instead of making a costly Medicare mistake. And by the way, I've seen people that are worth millions of dollars and they don't know how to pick a Medicare option. And I'm sure you could, tell stories of people who should know this, but they don't. Don't be embarrassed. Call us 888-988-JOSH. We will give you the book, 10 Costly Medicare Mistakes You Can't Afford to Make, free, or you just go over to Amazon, buy the book, 10 Costly Medicare Mistakes You Can't Afford to Make. Give us a call, 888-988-JOSH, 888-988-JOSH. And when we return, we're going to talk about a deadline in Medicare that many people aren't aware of. And I believe it's the end of this month, the end of next month, one of these deadlines. And also the Medicare calendar. If you're listening, a lot of people wait till it's too late to make a change in Medicare. When should you care? And here's the thing. If you're 50, if you're 40 listening, if you're 55, you need to be conversant in Medicare because there will come a time when you need it. And there will also come a time, if you have an IRA, by the way, everybody has a 401k or IRA. Do you know your 401k is almost destined to screw you if you've grown that significantly when it comes to the IRMA tax? So a lot of people don't realize, hey, Roths, they don't hurt you for IRMA. Life insurance doesn't hurt you for IRMA. Cash value distributions on life insurance. Real estate, depreciation can help you when it comes to IRMA. But IRAs, 401ks, 403bs, 457s, all of those, you need to do a future value calculation on the future growth because that could screw you in terms of IRMA. This is a major issue. Call us at 888-988-JOSH. We'll be back after these messages. And we're back. This is Josh Jelinski, the financial quarterback. We're talking with Danielle Roberts of the 10 Costly Medicare Mistakes book. So Danielle, we talked about IRMA, but I don't know if you've given much thought to asset allocation. It's something I've thought about, like where you take money out matters so that you don't get killed by that IRMA tax. Before we move on to other subjects, any more thoughts on that?
I just can tell you that we refer them all the time. You need to check with your financial advisor and you need to do it as early as possible. Maybe you can, if you have extra money laying around, maybe you can pay off your house. You can do some things where you're not going to have that money hitting. We see people will sell a home and then make a big profit, and then that ends up killing their premiums for the year. And these are things that you're not going to know to look out for. So we actually leave those decisions up to you guys, Josh.
Yeah, and they're very important financial decisions that most people don't realize until it's too late and they've paid a big Medicare premium. So let's talk about a Medicare calendar. What's the most recent deadline on Medicare that people should be aware of?
So the period that we're in right now, from January 1st to March 31st, is called the Medicare Advantage open enrollment period. There's also a concurrent period called the general enrollment period. So the general enrollment period is for people who failed to sign up for Medicare Part A and B when they were supposed to. They have to wait for the next general enrollment period to come around, and then they can contact Social Security and enroll in Medicare Parts A and B, and their benefits will start the month after they submit their application. For people in the Medicare Advantage plans, the open enrollment period that is coming up quickly, we have a deadline coming, that is for people that are in a Medicare Advantage plan that decide they don't like it, to make a one-time change in that 3-month window to either a different Medicare Advantage plan or back to original Medicare Parts A and B. So maybe during the fall annual election period, you chose this new Medicare Advantage plan, or maybe you got hoodwinked by one of the sports celebrities, and then later on you realize what you bought wasn't what they told you at all. And now you find you can't use that plan. It doesn't cover one of your medications. They don't want you to be locked into that plan for the whole year. So you've got 3 months at the beginning of the year to sort of try that plan out. And if you don't like it, you can change to a different plan or return to original Medicare.
And can you then pick up a plan G or N or whatever it's called, when you make that election change?
It depends on where you live. So in some areas, like New York and Connecticut, there is year-round open enrollment. So yes, you could go back to original Medicare and pick up a Medigap plan. By the way, is why plans are more expensive in those states, because they can't underwrite and everyone pays for those higher losses that the insurance company has. But in most states, when you return to original Medicare, if you're outside of your first 6 months on Medicare when you have a chance to get a Medigap plan with no health questions, or you've been in your Medicare Advantage plan for a couple of years, now you're going back to original Medicare and you don't have an election window that's going to allow you to pick up a Medigap plan with no underwriting. You may have to answer health questions. They're looking for you to answer no to most of those questions. They're going to look at your medical history. They're going to look at all the prescriptions that you've taken. And I can tell you that Big Brother absolutely does have that information. They can provide a lot of data. Underwriters can get a lot of data about prescriptions you've taken in the last 5 to 10 years. And they're going to see, are you a medical risk? And they could turn you down. So the order of events here is really important, right? Because if you're thinking you want to leave the Advantage plan and go back to original Medicare and get a Medigap plan, your broker needs to submit the Medigap application first, and then let's see if it gets approved. Then you cancel the Advantage plan. If the Medigap plan turns you down, now, because you haven't already canceled your existing plan, you could use that open enrollment period to make a switch to a different Medicare Advantage plan that would hopefully be better for you.
When will they not use your health against you? I know there are certain circumstances where it doesn't matter what your health is, you get the Medicare G plan if you wanted it.
Yeah, so when you first sign up for Medicare Part B, whether that's when you turn 65 or whether it's when you're 72 and you finally retire from your large group employer plan and now you enroll in Part B, that Part B effective date that's listed on your Medicare card, that will kick off a 6-month open enrollment window during which you can choose any Medigap plan in your zip code and you can sign up and you cannot be turned down for any health reasons. That one-time period, once it's gone, after that point, now when you go and apply for a Medigap plan in most states, you would have to answer the question. So that window is really important for folks coming into Medicare who want a Medigap plan, but maybe have a chronic health condition, something that is treatable but not curable. Parkinson's, MS, rheumatoid arthritis, osteoporosis with fractures. Maybe you have insulin-dependent diabetes and you also take blood pressure medicines and cholesterol medicines. These are some things that sometimes can cause you not to be able to get a Medigap plan. So you don't want to miss that 6-month window. And then there are also something called guaranteed issue periods that brokers like me use a lot of the time. So if you lose some other sort of creditable coverage, let's say that you had Medicare and Medicaid pays secondary, now you get married and you lose the Medicaid, there's actually a shorter 63-day window where you can purchase certain Medigap plans with no health questions asked. And we will interview our clients to see, can we find any election period where they wouldn't have to answer the health questions? Lastly, there are states where they have some limited open enrollment rules. So in California, for example, there's something called the birthday rule. Once a year, in the 60 days surrounding your birthday, if you already have a Medigap plan, you can change without underwriting to a Medigap plan of equal or lesser value. And so that's going to require that you already had the Medigap plan up front. But there's a handful of states that have those kind of rules. On our website, boomerbenefits.com, if you scroll right to the bottom of the homepage and type in guaranteed issue, it'll pull up a blog post that we wrote that will tell you all of the states that have expanded rules. But in most states, you will have to answer health questions after that 6-month window has passed.
Now, this is fantastic. We're with Danielle Roberts. The book is called 10 Costly Medicare Mistakes You Can't Afford to Make. So let's, I have a bunch of questions on Medicare, but I guess let's break down the Medicare alphabet soup. What's A, B, C, D? It gets kind of confusing. Break that down simply for our listeners.
Okay. So Part A and B together are called your original Medicare. These are the only two parts that you sign up for through the Social Security Office or Railroad Retirement Board. Parts A and B together being original Medicare, those parts came out in the 60s and they come from the federal government. Parts C and D are optional. They came much later and you buy them from insurance companies. They're regulated by Medicare, but you're going to purchase them if and only you want to. So Part C is the Medicare Advantage program. We've talked a little bit about that. You can choose to get your Medicare Part A, B, and D benefits through a Part C Medicare Advantage plan where you get those benefits using the network of doctors and pharmacies. And then Part D is a standalone drug plan. So do you know for over 40 years on Medicare, we had no outpatient drug coverage. I had clients back in 2005 paying $10,000 a year out of pocket for their diabetes medications.
Wow.
So we're really lucky that we have Part D now. And it is a way for you to help reduce your prescription spending. It's voluntary because some people may have other drug coverage. Maybe they're still working and they have employer coverage with the drug coverage built in. Maybe they're a veteran and they're going to get their drugs through the VA. So some people may not sign up for Part D, but most people should, because if you don't sign up for Part D and you don't have other credible coverage, they're going to penalize you down the line when you finally do sign up for Part D. And so Part D is for outpatient drugs. And again, that is voluntary and you would sign up for it through an insurance company offering a plan in your county.
Wow. So we get this question from Zeke. He says, how can we stop the predatory behavior of salespeople calling seniors and selling Advantage plans? Zeke does not like Advantage plans.
Zeke, I love this question and I totally agree with you. So, one of the things that I'm involved in is the National Association of Benefits and Insurance Professionals. And we actually just had a conference in Washington. And one of the hottest topics this year that we were communicating to the legislators is exactly about these predatory practices, where you have companies that are gathering your information, lead vendors, and then selling that information to insurance agents out there who are calling you night and day, trying to get your business over the phone. It's unacceptable. They are looking at it. They are making some changes to the things that the Medicare commercials can do for next year. But I would say contacting your congressman about this and putting the pressure on is really good. Now, you also can, through I think the FCC, you can opt out from some of those telemarketing calls. And that might be a good idea, because I have had clients tell me that their phone will ring 70 times a day in that annual election period when everyone's trying to get their business. At Boomer Benefits, we don't telemarket like that at all. We don't do that kind of business whatsoever. But our clients have told us that it's absolutely excruciating for them, because they have to listen to the phone ring all day long with people trying to sell them something. And many of them don't want anything to do with those calls. They've got a broker or someone that they trust. They've already made their decisions. And so it is something that you want to communicate to your elected representatives that is a problem. We have to have a loud enough voice for them to finally do something about it.
But on the contrary, what about people who say, hey, these salespeople, they have a valuable role educating the consumer? So maybe if they weren't bothered as much, maybe people wouldn't care as much about Medicare.
It's true, but there's so many ways to find clients who need help with Medicare other than literally stalking them by phone and driving them crazy with all of those calls and overwhelming information coming in. That's the main thing that we see is people, they have so many phone calls and so much mail that they are literally paralyzed. They have inaction going on. They're paralyzed from making a decision. They're afraid to make a mistake, exactly why I wrote my book and chose that title, because they are so overwhelmed. And sometimes they do absolutely nothing, and then they end up with a penalty. So it has to change somewhere, and that might start with I think Medicare banning lead vendors, which are just companies that call you, gauge your interest in Medicare, sell your information to 20 or 30 insurance agents or insurance companies, and then you get pounded away by all of those people competing for your business. Some of those people might actually be good people. They might be people who would do a good job. But because of the way that those leads are sold, instead of to one agent, to many, that I think is the key to where we've got to prohibit that from happening to reduce all of that pressure.
Yeah, and make sure you turn the ringer off. I don't even have my house ringer on my phone. We just have the ringer off. We do not, because, some days Donald Trump is calling. Some days it's Hillary Clinton. Some days it's, it's funny. My little 2-year-old, 3-year-old, he picks up and he talks to them sometimes.
I think that's a great solution.
He is fun.
Can I borrow him?
and he like drives them crazy, because he'll actually like have a conversation. So, and then they're like, is your daddy home? And it's funny, but I don't pick up. So, folks, give us a call, 888-988-JOSH, if you want one of the best books on Medicare, 10 costly Medicare mistakes you can't afford to make, with our special guest, Danielle Roberts of Boomer Benefits. We'll talk next about some Medicare mistakes we haven't talked about, a little bit more about G, N, and some of these other letters. End consumers are facing rising health prices and less disposable income. What are some things they can do? And we'll be back with your questions at 888-988-JOSH. Call us, get the free book. And if you have a question on YouTube, type it in the chat box, type it into Clubhouse. We would love to answer your question live with Danielle Roberts. We'll be back after these messages. And we're back. This is Josh Jelinski, the financial quarterback, with Danielle Roberts of Boomer Benefits. And she is just a wealth of information. So GN, is that just a form of D? like in a simplified way? What is the FGN? I know F is no longer like available. G is the
Yes.
Cadillac. N is a little cheaper than N. But can you break those down a little bit?
Yeah, but I love the way you just phrased that. F and G, is that a D? That's how people actually really feel. And Uncle Sam did not help this situation when they named Medicare Parts A, B, C, and D, and then they decided to name the Medigap plans A, B, C, D, K, F, L, M, N. Ridiculous. This is what confuses people so much. They have parts and plans and they confuse the terms and they don't know what they're dealing with. So here's something I can tell you to make it easy. If you have an original Medicare Parts A and B, and then you decide to get a Medigap plan, chances are really good that you're not going to be interested at all in Medigap plan A, B, C, or D, because those are the 4 plans with the least benefits. Typically, people who are on fixed incomes or have retired who want to buy insurance that is going to give them peace of mind and access to all of the Medicare providers nationwide, they, in great majority, that something like 90+% choose the plans with the most coverage. For decades, Plan F was the one that covered virtually everything at 100%. And so it was the popular seller. They did change some rules about that. So now anyone who is eligible for Medicare on or after January 1st of 2020, the most comprehensive plan that they can buy is G. Fortunately, G is almost as good as Plan F. It has coverage for all of the things that Plan F would have covered. The only difference is that you will take on the Part B deductible, which means the first office visit of the year, the first physical therapy visit, whatever outpatient visit that you do in the beginning of the year, the first one to hit Medicare's inbox for billing, they will apply a $226 deductible that you are responsible for paying. Once you've spent that $226 deductible out of pocket, Medicare pays 80% of your outpatient claims and your Medigap plan will pay the other 20%. So go to the doctor, pay nothing. Go to the hospital, pay nothing. Go to have cancer treatment, pay nothing. It is very comprehensive coverage. I don't know about you, Josh, but I have a $3,500 deductible and then 80% coinsurance. And I spend about $600 a month for that coverage. Well, someone on Medicare with a Medigap plan can spend considerably less and get a $226 deductible with 100% coverage thereafter,
Wow.
not even doctor copays with a Plan G. And then they just add on that Part D drug plan. They'll have copays on the drug plan, but it really is phenomenal coverage. And so it's something that people want to look into. If the Plan G premiums are too high, maybe you look at a Plan K or L or N, which have slightly lesser benefits, but will also have lower premiums. And of course, that's what brokers like we do at Boomer Benefits. We compare all the options, we show people the quotes and help them narrow down which one really fits what they can afford.
Oh, fantastic. And as we conclude the interview with Danielle Roberts, call us at 888-988-JOSH. I will buy her book for free for you. 10 costly Medicare mistakes you can't afford to make when you schedule and keep your no obligation review, or check her out at boomerbenefits.com. That's boomerbenefits.com, or just buy the book on Amazon for $10. It's well worth it, or you get it free when you call us for the free review. And as we conclude, consumers are facing rising healthcare crises, less disposable income. Any parting thoughts for our listeners?
Yeah, I wish I could say that I think it will get better, but it doesn't seem like it does, right? So we have to be planning far ahead to know that we can expect for prices to go up. And I often think, as a self-employed person, when I'm paying all of those taxes that you mentioned earlier, Josh, for some of us, there may not come a time where we even get to make use much of our Social Security benefits, but everyone will have an opportunity to use their Medicare benefits, and everyone is entitled to those benefits. It's just, as we've said tonight, that you've got to do the proper planning to make sure that you can hopefully pay as little as possible for those benefits. And then one last thing I really want to say, you have to have some personal responsibility with your Medicare plans. There are people who will sign up for a plan and they have an agent and they expect the agent to do everything, to call them at every deadline, to notify them at every increase. And agents may have thousands and thousands of policies. So of course, a good agency is going to reach out to you and leave messages and try to notify you things, but you also want to be reading the mail that comes in from your insurance carrier. Did you miss a premium? They're going to send you 3 or 4 letters before they will terminate your policy. It's amazing to me how many people won't even look at it at all because they think that their agent or someone else will tell them, and then they don't want to be held responsible when they owe a late penalty. So Medicare is not something that you set and forget. You're going to have to spend a little bit of time looking at your mail, reviewing your coverage every year before the annual election period so that you can make good decisions. And if you just commit to spending that 1 or 2 hours per year on this, you're going to put yourself in a really good situation.
Thank you so much, Danielle Roberts. Would love to have you on again in the near future. And thanks for breaking down Medicare, the top 10 costly Medicare mistakes you can't afford to make. Get the book now. 888-988-JOSH. We'll buy the book for free when you schedule and keep your no obligation review. Or you can go to boomerbenefits.com or Amazon, buy the book yourself. Thank you so much, Danielle.
You bet, Josh. Thanks for having me.
Bye.
Woohoo.
Thanks for everything,